Lionel Richie's there, and all night long. Sometimes when you're up all night long, you can actually save some investments. You ought to see what happened to Bitcoin over the weekend, about 11 p.m. on Saturday night. Let's check in and see what's happening.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And that all means it's time to check in on money and see what's going on Wall Street with the assistance of Philip Statler from Statler Financial Services in downtown Sebring. Philip, good morning. How are you? And it's been an exciting last 3 days on the markets, especially on the precious metals, hasn't it?
Oh man, they have been like you'd get seasick if that was the ocean. The ups and downs that we've seen with those, it's crazy.
Oh, good Lord. Yeah, it was amazing. I just paid passing attention to it yesterday morning when I was soloing. But, on Friday, silver was, let me go to my numbers. On Friday, silver was well over $120 an ounce, and I was kind of bragging about what a great price I got when I sold some family flatware. Over the weekend, it dipped down by close to 30-odd%, and now it's on the way back up. Gold went from dang close to 6,000 down under 5,000, and it's starting to recover a little bit, quite a bit yesterday and today. But evidently the precious metals market, and evidently the crypto market too, all kind of panicked for a while over the likelihood of Kevin Warsh becoming the new Federal Reserve Chair. I'm not sure I understand why the panic, because pretty much he added a little bit of predictability into the Fed mix. If he gets confirmed, he's pretty much going to do close to what President Trump wants him to do, and it doesn't sound like something that would scare the pants off the metals market, does it?
It really doesn't. I mean, so I'm not sure exactly why the panic hit the those commodities like they did. Because it not only did it hit those, it kind of hit crypto, Bitcoin over the weekend as well. So I'm just not sure what really what caused that. I don't know, what they see in that makes it that controversial.
It was well, don't say catastrophic, but it was definitely a market decline over the weekend. What I was reading was we had a little worry over the thing, and it started trending downward. And if I read it correctly, then a whole bunch of margin calls came in on people that had bought gold and silver on the margins. Got a margin call in. They had to liquidate in order to pay off their margins, and that just accelerated the decline. Now today and yesterday, they're evidently putting real money into it and going back into the precious metals market. So odds are by the middle of the week, things might at least start to go back to acting halfway normal. On the equities side, it was a pretty good day yesterday. Dow was up 515, Standard & Poor's up by 37, NASDAQ was up by 130. Sounds to me like generally the equity market customers are fairly happy, weren't they?
They were, and that was a good day because if I remember right, Friday was a little sporadic. So yeah, it was a good day to bounce back and add to. We're still off our highs a little bit, but all across the board, I mean, the Russell and the Dow, man, both over 1%.
Absolutely, and the S&P 500 only 0.5% up yesterday, but it's within I think about 30 points of its all-time record again too. So we're still solidly into nosebleed territory on the major indexes down the line. It actually on the S&P they made a run at the 7,000 mark, but just fell a little short at the end of the day. And then we get up to the government partial shutdown again. And guess which division didn't get funded, so it shut down? The Bureau of Economic Statistics. So we're supposed to get a bunch of employment news this week, like the JOLTS reports today about layoffs and potential hires and quits and all the rest of the stuff to give a reading on unemployment. And we ain't going to get it because that part of the government is shut down. Aren't you thrilled?
Well, could it come at a better time?
We should
Yeah.
almost be getting used to that. I wonder how many months it'll take to catch up after missing this week. That's always the question. So that ends up meaning that tomorrow, when you get the ADP private sector report, that'll be all the unemployment news we're likely to get for this week, and that kind of adds a disproportionate weight onto a number that we've always said might be directionally accurate, but almost never comes anywhere close to the real numbers.
Well, that's true. And sometimes even the direction don't come out quite right. So, it's a little spotty sometimes.
That's a nice way to put it. So you're being very charitable. Had a few reports that came out yesterday morning. I mentioned that Disney had reported an all-time record on revenue, and then turned around and their profit margin went down. Early in the market time, before the markets opened, Disney was trending upward. Then it turned around after they read it a little bit more carefully, and it fell like 7% yesterday. And I've got to believe that Disney investors are looking a little bit askance this morning, because before they announced the new CEO of Disney, Bob Iger, had said yesterday afternoon, yeah, if you maintain the status quo, you're going to get screwed, so I'm retiring, and his successor's name is, you've got that in front of you, I think, don't you?
Josh Diamaro. He is the head of the parks, Disney parks, and he will be the next CEO. He takes effect, takes the role March 18th, and the stock's liking that this morning, Dave. It's trading up. I think it was about 1.2%. Almost 1.2% this morning.
Cool. D'Amato's been running the parks section, and that's really the only part of the Disney quarterly report that was positive. The parks were going crazy, even in the face of a tourism decline. Iger is concerned about the capability of being able to make serious money out of streaming and all the rest of the alternative media that Disney's in. ABC hasn't been really a major force in network television. It's been the number 3 network now for eons, and they've got a lot of repairs to make there. ESPN bought the NFL network and the National Football League's media stuff back over the weekend. They got approval to do that. So D'Amato's got some irons in the fire to fix.
He does. There's obviously some things that need to be fixed, and he knows how to run a good show when it comes to the parks, but can he take that and implement things across the other sectors that they have right now will be interesting to see.
And the streaming media universe is at the point where we don't know which direction it's going to go. As more and more sources come in, it's starting to act an awful lot like other media, where you got so many choices. There's going to be a shakeout before long, and somebody's not going to survive this. As you get 75 different alternatives for 75 alternatives for subscription services, the average household is only going to buy so many, and eventually the shakeout's going to happen. D'Amato's primary job is going to be to make sure that they aren't one of the ones that lose the subscription count.
Well, that's right. And you got to think, in the subscription world, I mean, the one thing is for the consumer anyway, they can start and stop, right? I don't need that anymore. I'm not watching HBO Max anymore, so let's just cut that one out for a while. And then all of a sudden there's a series you want to watch, you just resubscribe, right? So I think you'll see a lot more of that happening.
And we may end up seeing a trend toward, like the cell phone companies tried for so many years, to try to tie people into contracts. Anything to stabilize the subscriber count. It's going to be interesting to see what the businesses react to with those.
It will be. That's good. You're right. There's a shakeout coming when it comes to streaming services.
Absolutely. The earnings season continues, and one of the big tech names that isn't necessarily a household name, but it's monster in the tech. I understand Palantir reported, and based upon the headline I got anyway, I gather they had a pretty good quarter, huh?
They did. They beat on both earnings and revenue. Pretty good. I mean, they only beat by 2 cents a share on earnings, at 25 cents a share. However, on revenue, they came in at about $100 million more than expected. So that was some good news for them. It has them trading up a little over 11.5% this morning. They don't have much else available today. I got Merck and Pfizer. Merck, my report doesn't say what they reported. but they came in and talked about their earnings and their revenue number. So they expect that 2026 kind of a modest outlook. They're going to lose some of their drug patents that are protected. And so that means that those drugs are going to roll off of their patent and they'll be picked up by other companies as generics. And so when that happens, Merck's going to lose substantial revenue when that starts to take place. And evidently, they got quite a few drugs that are kind of in that process now or getting close to it. So it's got more.
I remember the contortions Pfizer went through when the patent ran out on Viagra and all the generics came in. That's a scary thought for a pharmaceutical company.
It is. I mean, it's got them down about 1.5% today. Pfizer, they reaffirmed their outlook. They beat on their current, I'll get my words right here, man, quarterly earnings and revenue. But they're still trading down 4.8%. I don't know. There wasn't much else in their report to really give us an indication there. The last one I have for you, Dave, household name, PepsiCo.
Yeah.
PepsiCo reported they beat on both earnings and revenue. Again, not by much. Earnings up 2 cents a share, better than expected at $2.26. Revenue a little ahead of expectations as well. They've got PepsiCo trading up a little less than 1% right now.
Cool. They made another announcement, too. They were cutting prices on Doritos, Cheetos, and other junk food after complaints about affordability. So they even made a politically smart statement as well. Hey, we're going to cut prices on our junk food.
Just what you want to see.
Never hurts to say something the consumers will say thank you for. Resetting the table was up day yesterday, pretty much across the board on the equities markets. 45 minutes before we open this morning, what are we looking at?
I'm going to say it's a mixed bag right now. Well, mostly green, though. The Dow is the only thing that looks like it's red, and it's not red by much, Dave. It's like 5/100s down, $23. The S&P 500 is up by 0.2. The NASDAQ 100 is up by almost 0.5%. And the Russell 2000 is up by a little over 0.2%. So not bad there to start. Silver, a huge jump this morning after taking on the chin yesterday, up almost 15%. And gold, not far behind, it's up 6.6%. So we got those two bouncing back this morning. Crude oil up 0.7 to $62.58, which I think I saw it bounce around 64 earlier this week.
Got to settle up that Iranian situation for good or ill, because everybody says that's the reason it's bouncing up, because that's the top end of the trading range for them recently. Overseas markets, it was kind of a day on the Asian Rim market. The mainland Chinese markets had a party, though. One of them was up over 2% at the close at 6 a.m. this morning. European markets are almost solid red, but not by much. Average European index is down by just a couple 0.03% halfway through the trading day. We've got some that are down by a third, couple that are up by 0.2%. Europe doesn't know which way it's going this morning is the bottom line. Getting my retirement together means I need to know which way I'm going toward retirement. You can help me figure that out, Philip. How do I get a hold of you to do that?
They can give us a call at 863-382-0037 to schedule their 30-minute, no obligation phone call. We'll answer their questions, make sure they're on track for the retirement they always dreamed of. It's that simple, folks. Give us a call, or you can go to our website at statlerfinancial.com and schedule your appointment right there. With that said, we've got the Statler Financial Radio Show coming up this weekend. I lost my train of thought, Dave. 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And newstalk730am.com, where we stream everything we say there. Have a great day, my friend. I'll catch you tomorrow, all right?
All right, man. Take care.
Be well. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope you are doing well. Join us again tomorrow. Until then, have a great day. Bye now.